So we got pretty sizable news data from the banking sector for earnings. We also have a pretty interesting update from the biggest company in the world and disrupting the banking sector. So we're going to cover a little bit of that in this video as a quick economic update. This is JP from Blueprint for Prosperity, helping you to increase your net worth, relationship banking, maximizing your borrowing capacity, proper use of life insurance, and the ownership of real estate. Like the video, subscribe to the channel. I'm uploading content on a daily basis to help you customize your blueprint for prosperity. So we're going to go through this relatively quickly. I don't want to spend a bunch of time on it, but I thought it was pretty prevalent. Many of you who follow financial data, financial news rather, probably is hip to this, but we're just going to kind of talk about this from our point of view and perspective, and then what kind of value you can get out of this for yourself. So one of the most important things that's come out today has been that the earnings came out for banks and institutions. And as suspected, since the systemic crisis in the banking system kind of kicked off about a month or so back, we've seen smaller and regional banks take a hit on deposits. Larger banks, especially the big five, get a massive influx of deposits. We're talking about 8 figures per institution and new balances in deposits. This, of course, aided in what turned out to be record earnings for JP Morgan, Bank of America, Wells Fargo, all had great numbers. Citi had great numbers. All of these institutions did really well on their earnings. So the next major shift in the last day or two has been Apple rolling out their new savings product, at the moment exclusive for those who have iPhone and iOS, in partnership with Goldman Sachs, a savings account with a yield of 4.125, which is pretty competitive. So these have been major shifts in the banking system in the last handful of weeks. We also noticed that the tightening in the lending sector hasn't been as severe in the last week or two from the data that has come in, meaning that the tightening expected from the banking collapse, the securing of stability, if you want to call it that, in the banking sector by being a little more cautious about lending for these institutions has not been as significant as people were suspecting it might be. Data has come in that the money is still flowing from a credit perspective. All of this adds up to say that we are in some really odd times when it comes to our economics right now. The pending recession is continuing to heat up. More and more analysts, from the Federal Reserve, as well as banking analysts, are continuing to push the, foreshadowing of an economic recession sometime this year. The Federal Reserve, as of last heard from, has continued to stick to its guns on its interest rate hikes and sticking to its fight against inflation, even with accounting for a recession coming sometime this year. So with banks having massive earnings, Apple rolling out this, what many call a game-changing savings product. Where does that leave you? What does this information mean for you as the everyday American, Main Street, everyday depositor, everyday consumer? It is a great time to continue to pursue deposit products right now. I am all about investing. I'm all about ownership. That has been the pathway to wealth in this country for a long time, and it's going to continue to be. But we're in times right now where cash is literally going to be king, along with credit, meaning great credit. Having solid credit and having available cash, keeping debts low, especially high interest debts, are going to be key right now. While these banks are doing well with earnings, while these other banks that aren't doing well with earnings are offering better rates to attract depositors back and keep their existing depositors, you should be exercising your cash and your ability to earn, risk-free return on your cash right now. 3, 4, 5+% on interest rates, while inflation, at least headline inflation, is actually below 6% at the moment. Core inflation is below 6%. That doesn't mean everything is inflation-wise is below, those numbers, but it does mean, generally speaking, that you can get competitive, matching, and possibly slightly exceeding deposit rates on your cash versus inflation, which is pretty historic to be able to do. It's probably not going to last forever because it's really hard for banks to pay high interest, especially in a high interest rate environment where they have to borrow money at certain levels, where their books and their balance sheets are filled with loans from pre-pandemic era and slightly after the post-pandemic era with 2 and 3 and 4% interest rates, and having to turn around and pay depositors 3, 4, and 5% interest rates. It's not very sustainable for banks. So this era of attractive deposit rates, in competition with general interest rates and inflation rates, is something that you want to take advantage of because it's not going to stay forever. You want to really focus on maxing out your personal credit, and you want to maximize your banking relationships. I preach it all the time on this channel, but this is really a golden time for it. And I wanted to bring this to you because, again, banks are at their max earnings. The top banks, the smaller banks, are getting crunched, and it's leading to a scenario where big banks are looking stable and smaller banks are, putting out better and better rates to try to balance off the losses they're taking on deposits. So it's just a really perfect storm for deposit products if you're a consumer sitting on cash. The Apple opportunity is the same scenario. It's going to put pressure on these other bigger institutions to entice their rates, because right now these larger banks mostly have their best rates on CDs. It's not as competitive on their liquid savings accounts like Apple's offering 4.125 with no balance requirements. It's pretty impressive. So this is your opportunity to go out there with low to no risk, capture the best rates, lock them in for 6 months to a year at a time, and then watch where the economy goes from there. Particularly maybe around June, July, we may start to see some seismic shifts, or at least get data in that gives us better indication of where things are going. So leave your comments down below, your thoughts on this, your positions on this, the banking relationships you have. What are you investing in if you are invested? Let's talk about all of it down below and keep the conversation going. As always, I appreciate y'all tuning in. I enjoy bringing you this content. This is JP checking out. As always, stay focused, stay in motion. I'll see y'all soon.